Good afternoon, folks. Welcome to the daily scan for November the 1st, Friday. We have finally finished October, normally a negative month historically. Didn't do too bad overall, though. By the way, November 1st, historically, is usually a bullish day. And that's what we had today. So let's take a look at that before we jump into the scans and see how the market did. Just how bullish was it? That's the big question. So right here we have equities. So you can see the Dow, S&P, and NASDAQ all gained, but less than 1% for the day. And the VIX, as you'll notice down here, did pull back, but it's still above 20. So that's not what we want to see. You can see the Dow. You can see it took off, had a pretty good day. The jobs number came in as expected, basically, including the unemployment rate. I thought it might tick up slightly, but it actually came in as expected at 4.1%. So I think in general, the market liked that initially and still on track, I think, for the Fed to cut the week after next. So in general, it was positive in the morning, but then look what happened from about noon on. So there's the Dow, here's the S&P, almost back to yesterday's close. And the NASDAQ, same kind of thing. Right around noon, just before noon, everything started going down. New York Stock Exchange, even more pronounced. Small caps, mid caps, they all look the same. S&P 100, large caps. So everything looks very similar. If we take a look at the on the charts page, by the way, my website is breakpointtrading.net for those that are interested. A lot of what I'll show will come from here today. On the charts page, we have the 10-minute charts for with the aggressive sectors and defensive sectors, and this kind of gives us a sense for what's happened this week. 10-minute charts are better for traders, not so much for investors. If you're a long-term investor, then all this is just noise. So you can find a good stock with good fundamentals, pick a good place to buy it using technicals, and just let it ride. But if you are somebody that likes to trade, especially, or if you are somebody that wants to mitigate risk, technical analysis can really help with that. So this is what it's looked like for the week. You can tell the blue line was Monday's open. This red vertical line is where we started the week on Monday. So let me turn my cursor on. So right there is where we started the week. So that blue line is Monday's open. You can see for 3 days, we just sort of went sideways. And then on Thursday, dropped off a cliff. On Friday, started coming back again and then pulled back, not quite to where the open was, but pretty close to it. So which sectors, how did they perform? And the whole week, we never got back to the week before. Technology underperformed. Technology represents almost 33% of the S&P. So technology underperformed. Financials outperformed for the week. Discretionary was pretty much flat, up slightly. Communication services is where most of the gains came from. And these are the internet stocks like Google. And industrials was up slightly for the week. And then if we look at the defensive sectors and see how they did, healthcare slightly better for the week. Staples pretty much flat. Energy actually did fairly well for the whole week. Didn't get back to the zero line, but actually outperformed for the week. Utilities pulled back quite a bit. Materials was flat. So that's what the week looked like. If we go back to the dashboard and we'll go down and take a look at the sectors over here. So this is just for today, by the way. So these are the top performing sectors for today. Discretionary, technology, healthcare, communication services are the top ones. 3 of the top 4 are aggressive sectors. So that's what you would like to see when the market's going up. And that's what we have at the bottom. Utilities is the most defensive sector. And then energy and real estate and materials are the 3 that had negative gains for today. If we get down a little bit further, on the left-hand side are the top 10 Dow industry groups for today. Renewable energy, we're going to talk about that in a second. That was number one, top one in the technology sector. And discretionary broadline retailers, that's where Amazon is. So Amazon did great. They reported, and the Wall Street liked the numbers. Drug retailers, clothing and accessories, medical supplies, tires, general retailers, business training, airlines has been doing really well lately. Came in at number 9 for the day, and then heavy construction did pretty well too. On the right-hand side, these are the top 10 combined list. These are stocks that have made the top 10 list each week, which I publish each week. And I talked about this. This is the list that I use for the scans. And remember some of these names at the top right here because they've shown up in the scans as well. You might remember Powell. We'll look at that too. That's actually the only one that is on our buy list right now. But Adma, Lumen, Vera, all of these things, keep those in mind. Those are the top 10 stocks in the top 10 list. So let me, before we dive into it a little more, let's take a look at the sectors in a little more detail. So these are the sectors. This is intraday and reflects what I showed you just a second ago. This is just for today. But if we look at the whole week, you can see, and the S&P is down here. So the S&P is basically the index that we want to try to outperform. So anything above that line, it outperformed the S&P for the week. And you can see communication services once again. Russell 2000 actually started picking up this week as well. Financials, discretionary, healthcare, materials, industrials. A lot of these, and staples, a lot of these are defensive sectors. The aggressive sectors, technology, NASDAQ 100 down here, all underperformed the S&P. So kind of a mixture, but for the week, that's what it looks like. And if we go back 1 month, we got financials, communication services again. Technology for the month is doing well. NASDAQ, Russell 2000, these all above S&P. All of these have outperformed the S&P over the last month. So that's actually healthy. That's what we like to see. We like to see aggressive sectors outperforming. So for a month, for the month now, that's pretty much what it's looked like. But as I've mentioned earlier this week, the market sort of rolled over this week. So if we go over on the web page to the home page and we'll look at the market bias, this was updated today, and you can see once again, one more day, it has a down signal. So it's continuing to drop. If we look at the NASDAQ chart right here, you can see the NASDAQ is now below its uptrend line. The 5-day is below the 21 right here. So it's not crashing. It's not in a dire state just yet. It's sitting right above the 50-day moving average, and it's above the cloud. So other than those two things, with the 5-day crossing the 21 and it breaking its uptrend line, and also the fact that it has not been able to get back to a new high. But other than that, it's still in this sideways pattern. So not something to be concerned about necessarily just yet, but certainly something to take into account and be cautious about. If we look at, and you can see the overall market trend right now is cautionary, it's orange, because the short term has a bearish signal. If we look at the market bias matrix, this gives you all the components that it represents: indexes, sectors, industries, relative, commodities, metals, and currencies. That makes up the whole thing. And that's where this chart comes from. And you can see the color coding over here kind of shows you short-term, medium-term, and long-term, how it's changed. It's gone from green to red, and then to neutral, and then more reds. So we're starting to see more reds right now. This one here shows you the short-term orange line crossed over back here, the medium-term, the gray line, and now it's crossed the long-term as well. So it's indicating that the market is rolling over. By the way, and any of these things right here, whenever they change for the day, you can see they're highlighted in red. So today the S&P actually got a short-term down signal right here. So the S&P is sitting right at its 50-day moving average as well. So definitely something to watch, be concerned about. Next week's going to be very volatile. We have the election coming up. We have the Fed meeting coming up, probably dropping rates by a quarter point. But next week will be very volatile. By the way, on this page also are the top 20. This gets updated every week. And it actually was updated today. But the date up here hasn't changed, but I'll go back and change that. But you can see that for year-to-date gainers, NVIDIA, Constellation, General Electric, Oracle, those are the top 4 gainers. And the top losers are over here: Intel, Sirius, Moderna. These are the top. Boeing. These are the top losers so far year-to-date. Large cap. And then the mid and small caps are over here. There's Lumen. Remember that one? That was on our top 10 list today. And a lot of these you'll recognize that continue to appear on the top 10 list. SFM, VST, CRS, COHR, these are SMTC. These have all been in the top 10 list. And on the right-hand side are the losers. So this one here is actually bankrupt, this company. So I kind of don't consider that one. But we got iRobot, Medvax. So you can just take a look right there at the top 20 year-to-date gainers and losers, large cap, mid cap. Okay, so let's take a look now. We've looked at the sectors. The other thing I want to do with the sectors is right here is a subscriber asked me to do this, so I'm going to. I almost did it last night, but one thing you can do on stock charts, and I use stock charts for a lot of things, as you can tell. It's a great platform. I highly recommend if you're interested in technical analysis. Not only does it create great charts and allows you to create great charts, but it also has a chart school up here that is very extensive to help you learn how to do technical analysis. But one of the things that you can do is called the relative rotation graph. So I'm going to look at a relative rotation graph for those sectors, the 11 sectors, with the benchmark being the S&P. And this is a 1-year weekly chart. We can actually make that a daily chart, bring it in a little bit closer. And instead of 10 trading days, we can bring it down to 5 trading days. So now what you see, I'll make this a little bit bigger. So now what you see is the rotation. So the x-axis across the bottom is relative strength, and the y-axis is momentum. So you can see as things move to the leading quadrant, they have better momentum, relatively better momentum than all the other ones, and they have relative strength. So there's XLC, that's the communication sector. You see it was coming up constantly on my list before. There's the NASDAQ 100. Financials were in the leading, it's dropped down to weakening. The ones that are down here in the lagging sectors are Russell 2000, utilities, materials, healthcare is over here. Here's staples, real estate, and there's discretionary, trying to make a move. And one of the things I can do is if I want to focus in on a particular one, like let's focus in on the technology sector right here. So if I click on that, it highlights technology right here. And now I can see what technology has looked like going back 30 days. You can see it's moved over into the leading sector, and now it's moving down into the weakening sector. So you can kind of see its trend as it travels. Make this a weekly. You'll probably see over a weekly basis an even better view. So there's technology right there. And these are weeks now. So over the last 2 weeks, it's moving up into the improving sector. So it's come from leading all the way down into weakening, into lagging, and now it's just crossing into improving. And that's what we want to see. We actually want to see it continue to move up into the leading sector. The other one over here, this is real estate. You can do the same thing with real estate. That's over 11 weeks. So you can see over the last few weeks, it's gone from all the way from lagging through improving into leading, and now it's starting to move into weakening. So we want to find the ones that are moving from lower left to upper right. That's the key. So there, all of them are. You can actually animate this and just watch it kind of move as these things twirl around. But the idea here is to be involved in industry groups and sectors that are in the leading area and actually moving up into that leading area, like XLY discretionary is right now. And XLI is this one right here. So that's the industrials. Industrials looks like it's doing pretty good. So that's the way that works. It's kind of a cool feature of stock charts. And once in a while, I'll go over and take a look at that just to see which sectors are moving. So we saw discretionary, certainly technology was moving, Russell 2000. All right, so let's now take a look at the daily scan. Let's take a look at the scans for today. And for that, I'll bring up my worksheet. And this is how we will be tracking the scans. So here's the worksheet. First thing that we'll do is we've got 3 of them down here in the watch list. Uber has fallen out. So Uber, remember I said very risky. We bought it 2 days before earnings, and earnings disappointed. So Uber actually went down. We stopped out at 74.5. If we look at Uber, this is the big drop right here. It kind of hung in there right above the 200-day. So, and it has pretty good volume, up volume today, but it still closed below the open. So we want to continue to be cautious with Uber. The other one, interestingly, if you remember yesterday, Powell's one that we put on the list on the 29th, and we moved the stop up to 250 because of the way the market was acting. So let's take a look at that. 250 would have meant a 4% loss if we got stopped out. But here's what Powell looks like today. Powell had a great day, up almost 10% today. So that one it was great that we hung in there. It came down right to the 21-day moving average. This one again, all of these on the daily scan have been in the top 10 lists. So you usually will see something like this. You'll see where they've made a really nice run. That's what puts them on the top 10 list. They might have made a new 52-week high. And now Powell seems to be taking off. The earnings aren't until December 3rd. So that's great. And what we'd like to do is for this to continue to move higher or stay up there in that area. And we will then move the stop up. The next goal is to move it up to the 21-day moving average, which would be at 254 right now. And then eventually move it up to our buy price. So we can at least have break even. And the buy price on this was 260. So we'd like to get it to 260 and then let it continue to run higher. That's the goal. All right, these are the ones from our watch list. Here's a firm. We'll take a look at these. A firm is still just going sideways. So we want to, see how the market does, first of all. Zeta also going sideways, pull back a little bit. So it's probably a good thing that we didn't buy those. And then Zim actually started to take off. Zim is one that I said I really liked the way it looked yesterday. We did not get into it. We put it on the watch list, but it gapped up today. However, it's got a black candle, so it pulled back. It actually has a shooting star candle. So that candle pattern right there typically is a reversal candle. We'll see. Like this right here is a shooting star. You can see. So this one went down. So we'll see what happens on that. But right now we're not in it. Everything looks pretty good with it, but except that it's in the marine transportation industry group. So on that point, let me show you something else. If you remember on the dashboard, the industry groups that were doing well, renewable energy was number one. So one thing on the website under the charts section, we have all the industry groups right here. And each week I update this. I just did this today. Just about everything except for the top 10 lists have been updated for the week. And each week I put in the top 10 industry groups and the bottom 10. And you can click, actually, let me refresh this. There we go. That's what we want. So you can see renewable energies right here. So it's in the top 10. And any of these that have little circles next to them, you can click on the circle and it will give you the stocks in that industry group. So the ones in that industry group for today, let's look at for the week. So these are the ones that are performed. Look at that, 430% performance on this one. It's probably overextended. So it looks like it was bottoming out down there. But you can see some solar companies, Solar Edge. So my question here is this signaling a Harris win next week with the renewable energy group outperforming everything else? It was the number one industry group and for the whole week. So what's that telling us? If we go back and look at the group itself, you can see it had actually pulled back significantly, actually dropped through this this triangle right here, went right down to the 50-day moving average, and then had a great day today. So is that giving us a signal for a Harris win? I don't know. But I just think it's interesting that that particular group that had performed well earlier in the year and then started to drop off, all of a sudden this week is doing really well. This is a weekly chart, by the way. So that candle is for the whole week. I'll zoom in on that a little bit more. And you'll be able to see it. So there it is right there. So had a great week. Is that a signal? I don't know. We'll find out. But the point is, any of those stocks on that list, you can take a look at. So there's renewable energy. What are other interesting ones on here? Mortgage finance, one of the top 10 losers for the week. And those are the companies in that list. But if you look at the chart itself, mortgage finance right there just came up here and hit this resistance right here. Today dropped through the uptrend line and it's sitting right above the 50-day moving average. So that's not a good look for mortgages. In fact, on that point, let's go take a look at the 10-year just for fun. 10-year Treasury continues to move higher, and with it, the bonds are moving lower. So it's sitting right below this downtrend line right now. If it breaks through that downtrend line, then rates are likely going much higher. And I'm not sure the market's going to be able to withstand that. So the yield curve is still above zero, 2 years heading up as well. And here's bonds versus stocks. Bonds have been underperforming stocks, clearly. So 10-year yield is continuing to go up. Now, if we get a rate cut next week, and this continues to go up even with the rate cut, that will be the bond market signaling, giving a huge signal, probably that inflation is coming back. And inflation will look like it's coming back when we get the next report, next CPI report. I think it's going to come in a little bit higher. By the way, if we look at the VIX, I always like to take a look at this each day to see what the VIX is doing. So still above 20, pull back a little bit today. Whenever this goes up, the S&P goes down. So even though we had a little nice little rally today in the S&P, it really wasn't much of a rally. And the 12-month rate of change continues to go higher and definitely now uncorrelated. It's inversely correlated. So that's typically what happens when the VIX goes up, the S&P goes down. So we're going to have to watch this, because if it gets above these levels right here that it hit twice this year, not counting this one, actually twice in just the last 2 months, and you can see what happened to the S&P. It came down right there. It hit here, came down right there. It hit right here, and we've been coming down for a little while now. So if this continues to go up, that is going to be a big signal. I think the volatility primarily is related to the election coming up next week and a lot of uncertainty, like I mentioned. So we'll see what happens. All right, let's take a look at some scans for today, since we do call this the daily scan. So I have these, the scans actually are sent to me using the alerts in stock charts. Stock charts allows you to set up alerts, and I've got a number of different scans set up in my alerts section right here. There's 4 of them that we use for the daily scan, but I have other ones as well. So you can see I've got about 10 scans. So this just runs every day, and it sends me an email beginning of the day, whichever ones have satisfied that scan. So let's take a look. First off, here's one that's not on our daily scan list, but it's interesting because this is a bearish scan where the 5 moves below the 21, and NASDAQ 100 is what appeared today. So NASDAQ 100 just gave a short-term down signal. Still above the 50-day. So this doesn't mean it's going to crash, but it is something to be concerned about and be aware of. All right, what else do we have? Stocks near the 21-day moving average. ADMA, I mentioned ADMA before. So this one came down to the 21 yesterday, actually was below it, and today is above it. The other one on this list is Tile. Tile had a great day today. They actually reported before the open. They had been pulling back, went below the 21, and today clearly gapped up. But in a really nice, it ended at the highs too. So they must have had a great report. This is in consumer discretionary furnishings area. I wouldn't chase it here, but it's one to keep an eye on because this could pull back a little bit and then start to take off again. But it's a good sign if it had that kind of movement. So those are the 2 from the 21-day moving average scan. Also on, this is not one of the daily scans, but one of the bullish scans where the 5 goes above the 21 was the Russell 2000. So the Russell 2000 is trying to start to rally. So we'll see if that holds. All right, downtrend reversal. There's a couple of stocks on here and one that looks really interesting. This one, DocuSign. Look at that. This is, again, you can see that the trend, it's been on the top 10 lists. Earnings aren't till December 5th. It has been pulling back, hit the 21-day moving average, and now it has a green candle. It's outperforming its peers, and accumulation distribution looks great. So this one looks definitely like one that we should add to our list. And I'm going to do that real quick. I'm not going to do that with all of these, but I will do it today with this one. So today is 11/1. By day, call it 11/1, 4, call it 11/4. Symbol is DocuSign. I think that was the symbol. DOCU. Days to earnings. So earnings is 12/5, I think. Yeah, 12/5. So you can see earnings is green, which is good. Proposed entry price will be, right now it's at 71.11. Let's call it 71, see if it'll pull back a little bit. This one may not pull back much though. So we'll have to see what happens on Monday, but let's make it 71. So 71 is our price. Stop price now will be the 21-day moving average, which is at 68.50. So we're going to put a stop price on this at 68.50. And 21 EMA is the reason. Now, number of shares. So to figure out the number of shares, we use the risk calculator. So with the risk calculator, we're going to go up here and put DOCU up here. I'm just going to use the one that we did for a firm. And we'll check the ATR. So the ATR is 177 right there. 71 is the price we want to get in at. So 177 is the average true range, or the average range it typically travels in one day. That tells us the volatility of the stock. 71 is our price. So at a 7% stop, it would be 66.03. But we said we're going to use 68.50, which is where the 21 is. So 68.50, and this is the nice thing about running a scan for a downtrend reversal, because it lowers our risk. So now you can see the risk is only 3.5% instead of 7%. The number of shares is the same. So either way we set our stop, the number of shares is still 90 shares. If I were to set the stop here way down, let's say I set it at 50 bucks. I want to give it lots of room to move. That's $21. But there's a huge risk, because at 50 bucks, that's almost a 30% loss. However, this only lets me buy 40 shares instead of 90. So that's why this is a risk calculator. It tells you how many shares you can buy based on the risk calculation. And we're using 68.50. So 90 shares is what we can buy. So that's what we'll put in here. 90 shares. And by the way, this is all part of the same spreadsheet. So the risk calculator is right on it. Now I'm going to put the spreadsheet on the website at some point, once I make sure I've got everything worked out on here. So that's where we are right now. We also can put DocuSign. We'll save it to our holdings list. And then we will annotate it and put in a horizontal line where our stop is, which is right about right there. And then we'll put in a vertical line for the purchase. So that's the day that we found it right there. So this will allow us to very quickly be able to see how this is doing as we do our management, our trade management each day. Okay, so now that's in there. So what I'll do is I will save this and I will copy the link. And I'll put that in the spreadsheet. And I'll make it bold and 14 so we can see it a little better. So now that's in there. I'll save this, and now we can always click on this to see how it's doing. So right now we've got 4% stops on both of these. Powell's already moving up nicely. We'll see how DocuSign does. The scan was downtrend reversal scan. So that's it. So we've got 2 stocks now in our purchase, and we probably will have more down here in the watch list. So let's go back and take a look at any other ones. So that was DocuSign. I'll just quickly go through the other ones that are on this downtrend reversal list. One is Interface, which we already looked at. One is Vera, which was in our top 10 list. It's pulled back, came all the way back to the 50-day and starting to take off again. And the last one is, I think this is a Chinese stock. I'm not sure. This could be a French company. Anyway, it's integrated oil and gas. So again, this one is just bouncing off of 21. Looks interesting, but not one I'm going to add at this point. Next one is a downtrend reversal for stocks that have previously made new 52-week highs. And these are stocks that are less than $50. Now, normally I only get 2 or 3 or 5 maybe stocks, but today there's a lot. So that actually might be a good sign. So I'm just going to go through them very quickly. So here's Credo. Remember that was on our top list before. Here's DigitalOcean looks like it's just trying to recover. Here's EOS Energy. It's in electrical components. Here's a silver company. It actually closed much lower than the open, so I wouldn't put that on the list just yet anyway. GLNG, we talked about, we saw that one before. HRO, actually this one has consistently appeared in the top 10 list and it dropped out because it's pulling back. So right now it's sitting right at the cloud, right on the 65-day moving average, and it looks like it's trying to begin to recover. 1113 is earnings, so that one's a little too close to earnings. I don't think I'm going to put that one on. Here's KVYO. Just look at that. It's right at the top. It's getting ready to break out right there. Earnings is also on the 6th. But that one looks pretty interesting too in publishing. Here's one that I talked about before, Lumen. So here's Lumen. It's got a long sideways pattern, and this is basically what John Carter calls a squeeze. So this is a classic squeeze. When a stock just moves sideways, think of it like a coil spring getting ready to take off. If we look at, I actually have John Carter squeeze set up right here, and you can see if it's anytime it has this bright green right here, that is a squeeze, and this is a significant squeeze for Lumen right now. So this one is getting ready to explode, possibly. Earnings are on the 5th. So it's risky to get into it, but this is one that they've had good earnings previously. It's been on the top 10 list. It actually has recently made a new 52-week high. So this one, it looks pretty good, and I'm actually going to add it to the watch list. So we'll save this one into the watch list, and I'll put it on the spreadsheet later. I'm not going to do that right now. All right, so that one looks pretty interesting. Here's PTC Therapeutics. Yeah. Biotechnology, not impressed. Here's one that's energy, oil equipment, but it actually closed lower than it's open today. Here's another energy stock. That's the same one. Here's a real estate stock, Tanger Factory Outlets. This one could be interesting because it's had a really nice run. It's pulling back, but it's not showing signs of starting to move back up again. And you can see the MACD is accelerating to the downside, even though it's outperforming its peers. And the accumulation distribution line has looked pretty good. So this one actually has looked good in the past, but I want it to prove itself a little bit more before I put it on the list. Here's another one that consistently makes the top 10. Again, this is semiconductors, not looking strong enough right now. Tile, we've already talked about. That's on here. TPC has consistently been on the top 10. This is heavy construction. Heavy construction, if you remember, has been one of the top industries. It made a new 52-week high, bounced off the 50-day moving average right there. It's trying to get through the 21. Barely, just slightly outperforming its peers, but the accumulation distribution line is actually heading down, which often can happen when stocks pull back. But this one looks like the downtrend's pretty steep. Now, one thing that I do like is when the pullback happens like right there and the volume is low, that's usually a good sign. And now the volume is starting to pick back up, but it hasn't quite got above the 21 yet. So I'm going to put this on the watch list, but I'd like to see it prove itself a little bit more. And we'll just watch it and see what happens. All right, next is Tetra Tech. Made a new 52-week high. These are all new 52-week highs, by the way. Price is less than $50. Here's another one in banks, Vertex. Again, it's got a red bar. And Wolverine, pull way back. 52-week high was back here. Let's pull way back, sitting right on the 65-day and right on the cloud. So if it drops much lower than this is going to be a sell. It's in footwear, consumer discretionary. All right, that's the last one on this list. The next, let's see if there's any more. Nope, that's it. So that's all the stocks for today for the daily scan. Thanks for tuning in. Have a great weekend. I'm going to update everything. There'll be a new set of top 10s tomorrow. I usually do that on Saturday morning. So in the chart section down here, you can see the top 10. There's Lumen right at the top. Lumen is top 10 small caps. It's in the top 10 relative outperformers right here. Palantir has been in there. ADMA, I suspect, is going to stay in here. It's been in 3 of the lists, and probably this is going to move back up into the top 10. But these will get updated tomorrow. You can see the asterisks show you the new ones that have just been added. And all of these then will get added to this watch list, which I use for the daily scans, but anybody that's a subscriber can download it. It's a CSV file. You can download these lists right into your own platform, right from here, just a CSV file. All right, thanks everyone. Have a great weekend, and good luck trading. Take care.